We're going to move over to Randy Rocky at Swan Financial. Eric sent us this email. He's shopping for a new home and was excited to hear that the Fed had dropped short-term interest rates a half a point or 50 basis points. That's a couple of weeks ago now. He said he was hoping to see mortgage rates come down, but was surprised it didn't necessarily happen. He's wondering what happened in this email. Randy?
Well, short-term rates are more involved with home equity lines of credit and car loans, credit card scenarios.
Uh-huh.
But it also affects long-term rates in the long run. But they already baked that in. That half point was anticipated for what happened with long-term rates, and they dropped, 3/4 of a point in the last month and a half. So anybody that has a mortgage in the last 2 years should really look at refinancing. But so that has been the problem. So they were already baked in, and we're projecting 1.5 to 2 points. It's going to be slow. More that they're going to drop short-term rates, which in my opinion is going to lead to a 0.5 point to 0.75 point long-term rates in the long run dropping.
Okay, and they're also talking the next Fed meeting is November, right? As I understand.
Yes, and I really feel like the next two meetings, there's one in December too, and they're going to drop 0.25 point on each meeting unless we have some unforeseen scenarios come out on reports.
Got it. All right. Pretty good. So that gives us a heads up. Again, interest rates, as they're coming down, we're seeing more buyer activity. The only thing I will tell you, we've got something coming up in the near future. One of the pieces of information in a couple of weeks that prices of homes are also coming down. So for sellers, there might be time to get your home on the market sooner than later. For buyers, it's good news as everything seems to be clicking in your favor.